everybody and welcome back. This is Swati Gupta, Chartered Accountant. Today in this video, we will be discussing about lease. Its major two components that are ROU and lease liabilities. Okay, how to record them. These all guidelines are given under IFRS 16 or you can say India's 116. Let's simply understand what lease is and then we'll head towards what is ROU, how its calculation is done and how it should be presented into balance sheet, as well as we'll be discussing about lease liability and its presentation into the balance sheet. Okay, so let's move ahead. Firstly, lease is simply an arrangement and agreement between two parties. Okay, for example, there is party A, which is owner of the asset. Owner of asset. Now, instead of simple buying and selling and transferring the entire ownership, legal title and all, instead they have made an arrangement. Party A agrees that, okay, party B, you can use the particular asset. This means party A has given ROU, right of use asset. What it has given? Right of use. Now, the party B does not have title to it, does not have legal entitlement and ownership to it, but here, in spite being not the owner of the property, still party B is allowed to use this particular asset. Okay, it has right, it has control over it. It can, the party B can instruct, can guide how this particular asset should be used into its particular businesses or for investments and all. Okay, now it is said that the party B can record this particular ROU into the books of account. For this particular, party B has said that, okay, in return, I am promising you to make payments of lease, that is lease payments. Okay, these can be annually, biannually, every 3 months or monthly or 15 days per week, whatever the agreement is, it can be. Okay, it is periodical payment and a party B has agreed to pay these lease payments. Now, in this scenario, we can say that the person, the party who is owner of the property and has provided ROU is known as lessor, whereas the person or the party which is using that asset and has agreed to pay lease payments okay, periodically is known as lessee. Okay, now we say that lessee is not the owner of the property, still lessee is allowed, is permitted, is and lessee should record this ROU into the books of account. Okay, let's see how. Firstly, if the lease is taken, if that particular asset is taken for property, plant and equipment purpose, then it will be shown under property, plant and equipment, a separate line item will be shown, right of use asset. Okay, this is known as right of use. Okay, ROU asset. Whereas if it is in the nature of investment property, the purpose of that particular asset is to have investments, rentals and capital appreciation and all, then this particular property ROU, right of use, will be shown under the classification of investment property. But please note that ROU, right of use asset, will be shown separately. Are we good? Now it is allowed into the to be recorded into the books, and how to present it into the balance sheet. We are clear with this. Now the question comes, what amount should be recorded for such ROU? There are simple formula. That is, first you have to take on initial measurement all the lease liability. Whatever it comes, now you have to add the payments made before or at the commencement of lease. Any payments made, okay, at the beginning of the lease. You have to deduct any lease incentives if ever received. You have to add all the indirect costs. You have to add all the decommissioning, provisioning and liabilities and the PV of decommissioning liability, okay, to the same. The answer that comes, the amount that comes will be recorded as ROU, right of use asset. Now, actually, I would say the question that would hit your mind is what is exactly lease incentive and why it is being deducted, why it is being removed. Instead, all other expenses are being added. Now, simply understand, lease incentives is something that the lessor is paying or lessor has paid. Please understand, in this scenario, in the lease arrangement scenario, we can say that everything that has to be paid is by party B, that is lessee. Lessee has to make all the outflows. Lessee has to make lease payments. But in contrary, okay, if party A has made any payment or party A is supposed to make any payment, then that is known as lease incentive. Okay, now simply let's take an example. For example, we have a lease incentive, any payments made by the lessor. Okay, that is party A. Now, if example, lease incentive is of 500 rupees, example, okay, and lessor has provided it, and lease liability that the party B will be paying is, for example, 10,000. Okay, so you have to receive 500 and you have to pay 10,000. What we'll do? We'll not be doing in this way. Instead, we'll be doing a net deal. Okay, net outflow will be there. Instead, okay, therefore, we say that this 500 should be deducted from 10,000 and final 9,500 should be recorded. And therefore, we have deducted the lease payments. This is something that will be received from the lessor or is received from the lessor. Okay, it is not an outflow from your side, from the lessee side, and therefore it is deducted while calculating ROU in the books of lessee. Okay, now we come to the lease liability part. As soon as you record an asset into the books of account, similarly, you have to record a liability, that is lease liability, into the books of account of the lessee. Now, for calculating of lease liability or for the lessee part, you have to add present value of future lease payments or future lease outflows. Okay, whatever amount is will be added. You'll be adding interest. Why you are adding interest? Simply please understand, while doing PV, present value, you do discounting. You do discounting and you multiply with present value factors. Now, every year you have to undiscount, or you can say unwind the discounting, and therefore interest is added. You deduct all the lease payments, if any you have made. Any outflows that you have made will be deducted. Simple. And the amount that comes up will be known as lease liability. Lease liability. Okay, and will be recorded into the books of account of the lessee. Now, a trick point over here is, a catch point over here is that the lease liability won't be recorded as one figure into the balance sheet. Instead, this will be bifurcated. Okay, this will be instead bifurcated into two parts. Okay, that is current lease liability and non-current lease liability. Okay, simple example. For example, there is 5 years of lease and 1 year has passed. Okay, so for the current year, for the 1 year amount of lease, you would have charged that 1 year payment into the P&L. Now the remaining outstanding balance is for remaining 4 years. Now what you'll be showing? Instead of recording entire 4 lakhs as one figure into the balance sheet, you have to make bifurcation, for example, of 1 year and remaining 3 years. Okay, you'll be bifurcating for next 12 months will be recorded as current lease liability, and any payments to be made after the completion of normal operating cycle or next 12 months, then that amount will be recorded as non-current liability, non-current lease liability. Okay, this is how you have to record your lease liability and the ROU into the books of account. I hope this video is helpful. Okay, it has sorted out some of your queries and some of your doubts. Okay, in case if you want to learn entire Ind AS and IFRS in simple, very concise way with simple examples. Okay, so don't forget to check out the description box. We have link for downloading the app. It is available on Play Store and App Store both. Okay, so please download the app. Their chat box is available where you can discuss with us any sort of problem and we'll come out with some solution to help you. Okay, also you can comment below and let us know any further topic that you would like to know, that for which you would like to have a video for. Okay, this is Swati Gupta, Chartered Accountant, signing off. See you in the next video. Till then, take care, be safe, stay tuned.